Hi everybody, it's Christian from Serene Education with the 4 Major Scenarios update for the 29th of July 2013. Morning folks. Hope you had a fantastic weekend with family and friends. I see the weather has returned. 4 Majors this morning using our FX8 Ultimate template, starting with the Euro against US dollar. Let's crack on and see what's been happening over the past couple of days. End of last week, you can notice here on the Euro against US dollar, you can see a lot of hesitation going into the daily fib here at the 23.6, which happens to be those going in towards those highs that we saw just recently at the 1332.10 mark. Most importantly over here is we're trading above the monthly fib as well as the weekly fib. So a lot of positiveness here for Euro against US dollar. However, near term trading into the daily fib here at the 23.6. And to see any further upside to continue for this particular one, we do need to see this area here at 1332.10 being breached as soon as possible. A lot of hesitation, a lot of spinning tops. We want to see a decision candle preceding this. We don't want to be speculative. We want to see a driving candle, a positive candle. If this is still to remain positive, you can see the long-term sentiment still favoring the upside. Near-term indecision, the intraday indecisiveness, and the R-squared complementing that pullback. So heading into our 4-hour chart, you can see that we don't have the MACD and the ADX. You can see quite clearly that over the past 20 hours or more, the price has pretty much just gone sideways. So consolidative, however, still above. Most importantly, the weekly above all the moving averages, which is a good sign. We just need to see a bullish engulfing candle close above the 23.6. So set those target levels, those trigger alerts on the 4-hour time frame to see a break above that 133200 mark to see any further buying opportunities for this price. The only thing that's going to factor or hinder price from moving higher is going to be a bearish engulfing candle. If we see a 4-hour candle close lower and consolidate and engulf this consolidation period here we see in the 4-hour, then after we should be looking for a return to price support and resistance levels back towards ideally the 38.2 here on our weekly, which is currently from where price is trading right now to this level a good 124 pips and change. So there's more than enough on here to see any potential profits to the downside if we do see a nice bearish engulfing candle consolidation here at the prior highs. Moving on to sterling, you can see quite clearly here, same as the euro, we also had hesitation, and we're seeing this hesitation not only at our daily fib here, this dotted line, but also our weekly. I've taken the high on our daily to the current low. The highs here in June of this year to the low that we saw in July. You can see that price has been quite positive over the past couple of weeks, breaking the 23.6, testing 38.2, broken the 50%, which has happened to be also our monthly fib here at the 23.6. So a good positive sign for sterling. Then heading into the weekly. However, over the past week or so, price has failed to break above this current high now with the weekly high, which is 38.2, but also the 61.8 daily. And we also have the institution above us. So there's a lot of resistance above price at the moment now, and you can see it's reflected now on the indicator box. The R-squared is complementing most of what we're seeing on the intraday as well, which is a bit of negativity. And if we pop over to the 4-hour time frame, you can see that price has not really gone anywhere since we've hit it into this weekly high. So not a good sign at all. So what we need to see is potentially a break, a bullish engulfing candle close high on our 4-hour, getting above the 38.2 and the 61.8, which would reflect that we should be looking for further upside. If that's the case, then we could target this area here roughly around the 1556.80 mark, because that's where our weekly and our daily and our weekly complement each other. And that from this level here to this level, you're looking at 170 odd pips. So a good profit to be made to the upside if and when we get a close. You can see here, for example, the 4-hour price actually moved or traded above it, but closed and forming this shooting star formation, which ultimately is a consolidation or hesitation or even a negative scenario candlestick. As long as it maintains below this level here, ultimately what's going to happen is price is going to start looking negative. And if that's the case and we get a bearish engulfing candle close lower, then we should be heading back towards our institutional, back towards our weekly time frame here, or the fib at the 23.6, which in this case, from where price is trading right now to this level, which will be the institution, you're looking at a healthy 85 pips and change. So more than enough. But you can see that the RMO is well above the zero line. MACD is the only one that's below it, which which coincides with the hesitation we're seeing now on the chart. So sentiment's still looking positive long term. However, we are consolidating. US dollar Swiss franc. Here again, you can see the US dollar being very negative over the past couple of weeks. And this is stemming to what Bernanke mentioned a number of weeks ago regarding the QE3 plan. And what we've seen recently, however, is consolidation as we headed into this weekly and the daily fib here at this level at roughly the 92.67 and change. We have had hesitation here in the past, so it was bound to occur that we're going to see further consolidation at this level. You can see quite clearly here that the RMO and the moving average complement each other with a negativity. However, we're seeing a bit of positiveness intraday, but the R squared isn't complementing that. So is it telling us we're just seeing a consolidation before we see another return to negativity? If that was the case, we would need to see this level here. If I just go to the 4-hour chart just to show you a better indication. Here we go. We would need to see this level here. If I can get out of this. The 92.56 and change being breached. A lot of indecision candles on the 4-hour. No real true sentiment candle there. So this is still to be negative swing lows, swing lows, swing lows. We need to see a punch and close low on the 4-hour below this 92.56 and change would be a great idea. RMO is well below the zero line. MACD is slightly positive at the moment, but that's the consolidation we're seeing now. Hesitation candles nonetheless. We want to see a directional candle. If we do see a 4-hour positive candle, then we would head back up towards our daily highs. Our daily highs, which will be here at the 61.8, which would be a small return of roughly 71 pips. Then back towards our institution, which would be our 50% retracement area, which is 147 away, etc. to the upside. So we would need to see a bullish engulfing candle here to confirm this is going to be a positive consolidation for the near term, and then we can head back up towards the 61.8. Bearish engulfing candle closed lower, then we can start looking to target those the 100% fib on the daily, which would be a safe 133 pips away, and then we'd head back towards a weekly chart, which is a good 300 pips away from where we are now. So lots in the tank, but we want to see a confirmation candle. At the moment, we don't have a confirmation candle because they're all indecisive. We want to see a nice bearish engulfing candle closed lower to confirm that price is still looking negative long term, which is in the direction of the overall trend. Then we'd look to those lower lows. If not, we see a bullish engulfing candle here. We'd consider that we should be looking for further consolidation at this level here, and we could target back towards the 61.8 here as our first target. Last pair of the day is the US dollar Japanese yen. Notice on the daily, prices failed to really take on the momentum we've seen recently with the US dollar against the yen, above the 50% retracement here. Price is spending more time below it, so negative indeed. Bearish engulfing candle here at this level, and you can see the last couple of days in particular moving lower through Wednesday and Thursday of last week. Indecisive at the moment, but heading into the weekly 23.6 fib here at 97.23. As it stands now, from where price is trading right now to this level, there's still a healthy 70 pips on the table. RMO is below, MACD is getting stronger. The indicator box is looking majority red, but the R squared is not complementing that movement that we're seeing, that positiveness. So we should be looking for further negativity on this particular pair. Let's drop down to our 4-hour chart. We get a selling signal on the 4-hour. We have everything red, and our R squared is complementing that negativity. So as it stands now, indecisive candles nonetheless, but all our moving averages are above price. Our our monthly fib here is well above price, making swing lows. So our ultimate target now near term would be to the weekly fib here, which is this red line, and that's a good, as I mentioned, a healthy 70 pips away. Hesitation on the MACD, as you can see, it's got dark red, but the RMO is below the zero, which confirms that we should be looking for negative sentiment to the downside. 4-hour chart, you can see very indecisive candles. We want to see a decisive candle, so if you want to wait for a nice bearish engulfing candle on the hourly, it should give you enough to target still to the downside, and then we can head towards that 23.6. So negativity on this particular pair on our intraday time frames. You can see the swing lows on the hourly chart, very much still negativity in play for this particular pair. So look for bearish engulfing candle close lower, closing lower than this consolidated range to target the 23.6 near term as our first target. The only other thing that's going to stop this from moving lower is a bearish engulfing candle close higher, which then would consider that we should be looking back up towards the weekly fib here, the monthly fib, which is at the 90.89 mark. So here, indecisive, got to wait for a decisive candle, got to wait for a nice break and close lower than this consolidative range, and then we could target this near term. That's it, guys. Short and sweet today. 4 majors. Look to see if there's any news out today. Not much for this Monday morning. We've had Bank of Japan Governor Kuroda speaking. See if there's any news. It doesn't look all that decisive at the moment now. As you can see, the US dollar, Japanese yen just ranging. This morning we have the 9:30 a.m. GMT. Sterling net lending to individuals month-to-month figures coming out. Then we have the CBI realized sales figure. Then this afternoon we have the pending home sales figures month-on-month for the US market, followed by late this evening at 11:45 we have the New Zealand building consent month-on-month figures. So not a hell of a lot out today. So look to see if we're going to see the momentum that took us to where we are now, or driving price to where we are now from last week, continue that direction. We've got to wait for a lot of consolidation breakouts, as I mentioned on the early patterns. Other than that, back it up with sound money management rules. If you are using this particular template or any template, please follow the rules of the template or the trading strategy that you're applying. Very, very important. Rather be very mechanical in your approach. You don't want to be bringing a lot of emotion into your trading. So see, if you are looking for a trading strategy, look for one that's very mechanical. This indicator box plus these buying seller arrows make the FX8 Ultimate a very mechanical approach, which is what you want in your trading. If you want to know any more information regarding this particular template and any of our other strategy templates, please email us at info@sereneeducation.com, one word. Okay, other than that, I'm going to leave you to it. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.